And we are going live action here. Okay, here we are. All right, welcome to stream number 2 for the day. It's the 14th of February. Happy Valentine's Day. It's just about quarter after 6 p.m. Eastern U.S. time here. Welcome, Josh. Long day of travel, but still managed to get on the horn with us today. Welcome.
Yeah, happy Valentine's Day, buddy. Hope it's a special one for you and the wife.
Yeah. She got me a card this morning, or had a card for me this morning, and I have prepared a special dinner, and she's on her way home now, as a matter of fact. So it'll be a
Nice.
nice
Hopefully,
evening.
hopefully she got you some Bitcoin.
I think I got her some Bitcoin.
You got us some Bitcoin.
Yeah,
You
I
got
got
you and your wife.
the two of us. We added to our stash. We stacked.
There you
The
go.
couple that stacks together stays together.
That's
Hope.
right. That's right. So yeah, I've been traveling all day. I was just telling you, I was on a plane for 5 hours and didn't see any UFOs. It's kind of bullshit. You'd think
Not a
after
single.
all the
Yeah. Oh, sorry.
No, no
Go
balloon,
ahead.
no balloons, no UFOs. You'd think with the media talking about it, there'd be an alien invasion. But it's funny when I looked up in the skies, I didn't see any aliens. I did notice the whole monetary system is still messed up, but let's not talk about that. Let's talk about the imaginary aliens that are coming.
Yes. Like how many balloon vector attacks did we experience in a short period of time? That's what I want to know.
like, I've been alive for 38 years. I've never heard of like a balloon, and then in the past like 3 weeks, they're the biggest problem we face as a society.
Yes, how interesting this is that we are experiencing this type of nonsense in the world. But really, is it? I mean, is anybody that like can fog a mirror and has an IQ above sea level? Is anybody actually surprised? I mean, I want to say that I am, but I'm not. So because I don't want to be, I don't want to be a fibber and say that. Ooh, at this point in my life, like you were saying, come on. Anyway.
Yeah, the only reason to bring it up is because I don't know that anybody buys it, right? Anybody that, like you said, that has any sort of semblance of, what's going on, or, like you said, can fog a mirror. I mean, it's just another line of BS, for whatever reason. I don't know the reason they're doing this. It's not like we have some sort of insight to be like, why, what I think they're doing is they're stoking fear. They want people to be afraid. They want an excuse to fire up the war machine and do what we've done for the past 100 years, is start another war when the money gets weird.
Yeah, man, what do you think it would have been like to have been alive pre-World War II as Hitler was beating the drums of war and ramping up that war machine, and we were seen to be the sleeping giant that wasn't, or we were seen to be the nation that wasn't going to get involved. And I think I remember reading something very specific around the idea that we would have to be provoked in order to enter the conflict. The only way for us to enter the war in Europe, as they called it back then, only way for the United States to get involved in the war in Europe back then was to be provoked. Uh, and then we see that we got provoked from the other side of the world, the Japanese doing their thing at Pearl Harbor, and let go back and read history and make your own assumptions about like how this all went down. But then what I'm trying to get at is that the follow-on effects of us becoming involved in the World War II conflict, what it did economically, it spun up all this spending and it created all these jobs. And it wasn't, I'm not suggesting that global conflict, militarized conflict is a good thing at all, but it certainly did get the wheels of the economy spinning domestically with all the funds that started flowing into businesses that were transformed from one type of business into a company that was making materials and machines and supply fabricating things that were going to support the war effort. it makes me think, and I'll pause after this point, but uh, in my wife's business, I noted, or I can remember very vividly them thinking we have to shut down, but they only made it about a week and a half before someone very enterprising in their business figured out that they were able to take some of the machinery that they had and they were able to make the N95 masks. And I was like kind of stunned by that. And it's what I'm trying to get at is that in a very small scale, we saw an existing business that was making one product of one type was very quickly able to retool and then be able to supply something that the government was paying for in broad strokes. The government was writing the checks for these things back in those days, and then all of the government, all of the federal funds that flowed to get masks into people's hands. And this is not commentary on COVID. It's more just commentary on like a catalytic event that spurred a tremendous amount of I'll call it economic activity without really being too concerned about whether it was right or wrong or anything in between. So I'll pause there for a second and let you chime in on what you think about all that.
Yeah, well, it's interesting. Another story with the current situation we were just in. My cousin works for an alcohol manufacturer in Nashville. And they make vodka. It's called Big Machine Vodka. And during the pandemic, they went from, I think they still made vodka, but they used the machines to make hand sanitizer. And for a certain point in time, they were like one of the biggest hand producers, I would say, in the region. I think there was some crazy, they were making so much of this stuff because if you remember, there was a period of time where people just went absolutely nuts. Like, again, another silly thing that happened, like, all this stuff like hand sanitizer and toilet paper is going to save you from the deadliest bacteria or disease ever, right? Like, it's also silly the way all this stuff happens. But to your point, I mean, they use these events, and this is beyond my pay grade. This is just pure speculation, though. Same stuff that's happening today, and it's what I have observed recently, though, and this is a broader point, is it feels like these big events, whether it be a pandemic or a war or a reset, it feels like time in between those events is shrinking and it's getting shorter and shorter and shorter. And so we used to have an event every 10 years and years and 2 years and 1 year. And in my way of thinking, I think that correlates very coincidentally with what's happening to the money, right? And so uh, when you look at something like Bitcoin and what's going on, and dovetail that with the increasing pressure that they're putting on the crypto industry, because if we're going to war with Russia and China, why do they even care about crypto? Like, what is the, if we're in and space aliens are invading, right, and all these things are happening, right? Like, why are they talking about crypto every single day? Why is the SEC pushing all this stuff? Don't we have bigger fish to fry? If crypto is this big nothing burger that isn't really important, but yeah, we need to talk about it every single chance we get, you know, uh, I don't understand that logic. To me, it just sounds like crypto is a big deal. They're trying to downplay it, and they're trying to downplay it. Like, my personal opinion, you know what I want to happen? I want them to continue to inflate the money away over the next 30 years while we transition to a parallel economy backed by Bitcoin, gold, and a basket of commodities. Because I think that's the only way we get out of this without the proverbial shit hitting the fan and things getting crazy. Now, the question is, do they want things to get crazy? I don't know. I have no idea. But that's just kind of my simple take on all this, is that if you pay attention at all, some of the stuff starts to correlate and it all seems to revolve around the money, right? And if you look back through history, you can draw analogies of all these wars and look at who benefited, right? It wasn't the people, it was the corporations, like the today would be the Black Rocks and the governments. And what as individuals can you or I do about that? Nothing, in the sense of we can't change the way the world works in a broader spectrum, but what we can do is take our own investments and put some of that money into things that are outside of that system, outside of the war system. And my belief, and I think you share the belief, but I'm not going to put words in your mouth, is that Bitcoin is that. And that's why it's so radically important. And I think that's why people are so passionate about it. And I think that's what people that aren't involved yet don't necessarily understand, because they just think it's some sort of like speculative bet. You know,
Hmm.
what this is it's for the first time in human history, we have money outside. Well, I shouldn't say that. It's not the first time in human history. We've got money that nobody can seize from us, right? Like that's outside of the system. You have thoughts on that? Does that what I said make sense?
Yeah, yeah. There's a couple thoughts that are brewing. Things so hold the remind me of the last point there about we have for a first time in probably a long time uh, we have real like base layer money that someone didn't issue or someone that, or that wasn't issued by someone that can then be seized easily enough by a government
Yeah,
or a marauder
non-decree.
or yeah. So
Yeah,
but hold that thought for a second, going back to uh, why I think the current administration perhaps and all of the folks behind the scenes, that's a nice way to say it, is uh, this idea that because I'll just use Bitcoin as an example, it doesn't it isn't issued by the central bank of the United States. It anyone, regardless of their nation state or wherever they happen to be on Earth, can acquire it. Uh, Another thing, it's digital. The internet, the physical infrastructure that makes up what the internet runs on is in place now. It took how many what 30 years or 20 years to like get the telecom infrastructure, maybe 30, 40 years. I don't know how long it, but let's assume that we're not splitting hairs over copper versus fiber in terms of physical infrastructure that makes communications viable globally, where we can pick up a phone today and call someone in the UK where it used to be, forget about it, you're going to send a telegram or write a letter. What I'm trying to get to is that this having Michael Saylor talks about Bitcoin being the rails globally for money to flow. And interestingly enough, the internet and now crypto being digital money is able to flow globally. And what I'm trying to get here, what I'm trying to get at here is the access. It used to be that if you wanted to participate in the global economy, you tried to find a way. I mean, outside the United States, you tried to find a way to export your goods and services to the American markets so that U.S. dollars would flow into your economy, and you could either swap them for your local currency, or people started to and this the idea of the and I don't know if I'll say this word right or I may not be using it right, but the dollar hegemony or this idea of
Hegemony.
the
Yeah,
yeah
hegemony.
the dollar becoming the world's reserve currency and all of the benefits that come to us as a country in the U.S. from that, meaning everyone around the world. And I'm reciting from the teachings of one Peter Zeihan, the geopolitical strategist who is well known for his books like The Accidental Superpower, The Absent Superpower, and so on. I've read all of them. If you really, really want to cure your insomnia, I suggest you check out Zeihan's stuff. No, and I mean that in a loving sense. But the picture
He's
that
not
he
a big Bitcoin go. Sorry, he's not a big Bitcoin guy though, is he?
no, he is not, and that's I mean, hey, no one's perfect. But the way that this person is able to explain like how we got to now over the last, say, 150 years, specifically calling out the Bretton Woods treaty and how that began what we know and love as the modern day globalization. Uh, that is starting to unwind, according to the Zihan. And anyway, the point I'm trying to get to is that with dollar, people still want people still want U.S. dollars. But what I'm trying to say is that what could potentially be perceived as a threat to the dollar dominance is digital money that anyone can have access to, and you don't have to do it by way of exporting goods to the American market and hoping that dollars flow back into your nation. You're with technological advancements, talking like smartphones built on top of the internet layer, which is built on top of the physical telecom infrastructure layer, and the connecting of continents. we're able to globetrot in like fractions of a second with information, and money can flow as freely and as fast as information does from one device to another across borders without any concern about nation state, like political affiliation, whether or not you believe that the Soviet Union should be all together, or if you think that Russia should be not exist anymore, or if you're Chinese or you're from India, you're from Africa, all these things. I think that the government, it's very likely that people perceive crypto as a threat to the dominance that the dollar has given us as a nation state, meaning the United States is the preeminent superpower, because of which Peter Zeihan describes how we became that way. And this might be perceived as a threat, but I mean, I don't know how to make it any like more concise than that on that one thought. So I'll pause for a second and see if you have any follow-on thoughts that were triggered by that diatribe.
No, 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 no. I think, I think as Bitcoiners and people that are interested in crypto, I think it's important to when you hear somebody like Peter Zeihan, who I'm familiar with, but I haven't read his books. It's important to listen to people like that and to see if they can show you where you're wrong, right? Because, like we always talk about with trading, it's not about necessarily being right or wrong. It's about making money, right? And so, if one of these guys, and they've been trying for what, 12 or 13 years to come out and have a coherent argument as to why Bitcoin is a quote unquote a scam or a bubble or won't work. If one of them actually had an argument that was valid, I think we should listen to them. And I think we could, adjust or, make changes accordingly. That, and when I say that, I mean, I don't mean changes to Bitcoin. I mean, changes to how we think, uh, in the
Right.
world. But none of these guys so far have been able to change my view. And my view is not very important compared to the view of a Michael Saylor or Elon Musk or guys that have, and forget Michael Saylor and Elon Musk, how many individuals have 5 million, 10 million, 20, 30 million, you know, on the Bitcoin network right now, right? And like you talk about all the time, the Bitcoin network is a phenomenal system to send dollars. It's much better than the traditional system. And that's something that's a little bit more complex to understand for people that are new to all this, but it's entirely possible that Bitcoin could be the rails for the US dollar all over the world. And why they're not thinking about that blows my mind, unless they don't want the dollar to be the reserve currency anymore. But everything else they're doing seems like they certainly want it to stay that way. 70% of the world's debt, don't quote me on that, 78 settled in dollars anyway. So, if you can move those dollars on Bitcoin, and somebody who is unbelievably articulate this is Jack Mallers. I mean, the guy is, you know, he's a, is that his last name? Did I get that right? He's the
Yeah.
kid that, so, as somebody who's not a Bitcoin maximalist, sometimes I listen to him and it's like, it's frustrating at some point when he kind of rails against the other crypto industry. I think, you know, there are bad players in the crypto industry. But I get frustrated sometimes with the maximalists because it's like, guys, like, okay, we get it. There's stuff out there, but like, so when they talk about that stuff, it's like, okay, I kind of have to tune out a little bit. But when they talk about, the US dollar on Bitcoin, like when he talks about his company and Bitcoin specifically, I think people should really pay attention. I mean, it's unbelievably powerful, the potential that we could have in using Bitcoin as a dollar rail system. And then, subsequently, like I think you'll see instances where you can use other crypto rails for other aspects of the internet and payments, right? Like, so I don't think it's like a winner take all scenario with all this stuff. But back to our point earlier about just everything going on, uh, with the global economy and then with Bitcoin and all these people, it's just a lot right now to take in, right? And so what you and I are trying to do is talk through this and kind of organize our thoughts in a way that we can potentially help other people who are new to this, right? And kind of understand why it's important to look at everything going on in the world right now through the lens of money and how the money system is structured. All of this is happening. All these events happening in the world are not random, wild, uncorrelated events. They're all focused around the money. That's what all of this is about. That's what it's always all been around, is the money and power. And I know that sounds simple, but once you get into Bitcoin, you start understanding how our money system actually works. and you're going, holy crap, this is all about money. This is all about power. Like it's pretty wild. But that's kind of, I'll wrap it up there with my kind of back and forth. If you had any more thoughts.
I do. I did put Jack Mallers' Twitter uh, in the chat, his link to his Twitter account in the chat. If you want to follow Jack Mallers, he's
Smart kid, man. He's
smart
fun to watch.
guy.
He really is.
Yeah, I mean his passion is it's contagious, I think. But
I agree. I agree.
when he talks about like how I think that he has a really deep understanding of the existing financial system and how money moves around both in the United States in like between the different types of banks and other money service providers or uh, yeah other money type businesses like Western Union is a good example of a money service money MSB money service business. Like a bank is a money service business too, unless I'm just completely wrong there. But somebody can correct me at a later time. What I'm trying to get to is that Jack Mallers knows how the system works, and he's talks a lot about how to take the advancement of block like this idea of blockchain and um, crypto and like money as information flowing over the internet globally and unlocking it, unlocking the potential that comes from having like unfettered access or open access across borders and being able to get money into people's hands who need it. I think that right there is an interesting topic because it flies in the face of like a lot of like out especially outside the US where the governing entities aren't always like the most desirable types and they they got into power by taking it, meaning they got into it by force, and they weren't necessarily elected or whatever the circumstances are. What I'm trying to get to is that this kid Jack Mallers knows what the fuss is all about, and it would be good use of your time to listen and understand like where he's coming from and be educated by the things that he says about and the product that we're working on. It's called Strike, and it's a it's a simple app. You can download to your smartphone, your iOS device, your Android device, set up an account, connect your bank account, and then you can send money to anyone around the world quickly and for next to nothing, like virtually, I won't call it zero cost, but literally next to nothing. That's another that's another sticking point in if you work in the financial services business, uh, if money is your business, then it's a bit of a threat. I mean, back to Western Union for a second. You know, being able to send money back home. If you, I'll quote. Well, I won't quote, but uh, the 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 thing that I'm trying to get to is that like Western Union makes a lot of money taking money from people in the U.S. and then sending it overseas and then taking a cut. And the Bitcoin is an example, or any other crypto that can be remitted to others around the globe. That can happen instantly. It can happen for next to nothing, and you basically cut the middlemen out. And I think that if I was in that business, it would be. I mean, think about the internal politics at Western Union about like this glaring threat that crypto is. What are they going to do? And real quick, Flyboy Forever 99 is asking a question. It says, can you guys also discuss these cryptos that turn out to be scams? For example, Luna, Terra, and FTX. Oh, there's a topic that
Sure.
we haven't talked about. Yeah.
Well,
So,
that's it. Well, real quick on those. I mean, I think what's interesting about those examples, Terra Luna. It's funny with Terra Luna. Terra Luna, if you look at it, actually worked exactly as it was designed. The issue was their Anchor protocol, their Earn protocol. They were offering 20%, and that was just unsustainable, right? Like you couldn't give a 20% return, and so the way that it worked. And God, I'm going to butcher this. I knew 6 months ago better because they were right in the middle of it. But as you know, I'm not even going to do it because I'll butcher it. Like, yes, the Terra Luna blew up. I'm trying to get to the point of I don't know that I would necessarily call Terra Luna a scam as much as I would call it a failed project, right? And so maybe we're arguing semantics. There are a ton of scams out there, an absolute ton. And FTX, FTX in itself, the cryptocurrencies within FTX were fine. FTX was just flat out fraud. I mean, that can happen in traditional banking. The guy took customer money and used it to try to bail out his hedge fund, right? Or his sister hedge fund or whatever it was. But yeah, there are a ton of scams and there are a ton of things to be careful of. And those are two examples of where I don't know that they would exactly be scams per se. Like, okay, so FTX, yeah, that was a scam, it was a fraud. Terra Luna, I would just say it was a failed project. I think it had a lot of potential. And a lot of things too, like when investing in these things and looking at some of these projects, is you have to understand what you're investing in. All of the cryptocurrency space is one giant experiment, right? And so a lot of this too is, when you invest your money, you want to be sure to understand that what you're investing in is a project. A lot of people have made a lot of money and a lot of people have lost a lot of money. But the key is, and Ted and I always talk about this, is if you manage your risk properly with these things, you're not going to get blown out of the water. And the reason you have to manage your risk is because these are experiments for the most part. Bitcoin, I think, is on a different page. I think it's its own deal. I think it's an entirely different thing to talk about. But with crypto, I think risk management is really important. Ted, do you want to add to that? And then if I
Yeah.
got anything wrong there, feel free to let me know.
I think it nailed it, especially with Luna and Terra. Those, like, I think the point I'm trying to get to on those two is that there's a lot that I don't fully understand. I think the way you articulated is very good. I'll talk a little bit more from my perspective. I think I can talk about FTX a little bit better, having worked in a family office hedge fund setup. I got to learn and understand what it was like to basically take other people's money and then put it at risk and then deal with like the consequences at the end of the day. And like when things went well, everything was great, but when things didn't go well, uh, there were lots of rules and regulations and things that we had to work into our day to day, week to week, month to month, quarter to quarter process, so that we, like, at any time if someone came knocking on the door and said it's time for, I guess the only way to make it concise is that if there was time for an audit, that, or someone wanted to look at the books, that we were CYAing, covering our butts, and following all the rules. And because we were domiciled in the United States, excuse me, we had to follow certain rules. If you're not domiciled in the United States, or you're outside of the long arm of the law, then it gets a little weird, I guess. You can get away with more things, but getting down to like the FTX, I guess the issue, and Josh made a good, or pointed out, like, the really, I think the biggest problem here is the commingling of customer funds and using customer money to then go, basically spending customer funds on things other than placing trades, or I mean, the laundry list of things that they were doing wrong with customer money and false. I mean, I mean, not only is that illegal, first of all, if they had been domiciled in the United States, then the reporting requirements, that they wouldn't have made it very far, because someone would have sniffed blood in the, or wouldn't have passed the sniff test, in a manner of speaking, very early on. And the fact that they were domiciled outside the U.S. gave them much longer runway to. I'm going to be brutal with the aviation puns because this is the crypto flight path. So sorry about that if that gives you the heebie-jeebies, anybody. But what I'm trying to get down to is that the committing of, like, knowingly committing this type of fraud in the, like, early days for SBF and all of the others was what paved the way. And see, they were getting away with it, and they were really good at covering their tracks up until they weren't. And that's when the house of cards came tumbling down. And once that, like first like crack in the foundation started to show up, then
Hey,
it was
Ted,
only a matter of time.
you were in the matrix there for a second. No, but the general point, right? It was that they could only cover their butts for so long before the behavior got exposed. And back to Terra Luna. I mean, what I was going to say basically, when I talk about an experiment, they're experimenting with something called an algorithmic stablecoin, which meaning they were using an algorithm to peg a stablecoin to the U.S. dollar. Categorically, those won't work. Those will never work. I don't think the United States government is going to even allow people to try those to work. You're going to start seeing, more regulations on stable coins. I think the only thing that works, and this is just my opinion, is dollar for dollar or U.S. Treasury backed stable coins like Tether, as crazy as it sounds, or USDC. But we're going to see the approach they take. The thing, Luna blew up because of the stable coin, right? And the issue though was that the protocol worked exactly as designed, so nothing broke. It just wasn't designed correctly, right? And that's, again, I could probably get butchered for saying that, and then I might be 100% wrong. That's my understanding of what happened. But I think the more important takeaway is, like, 99% of crypto outside of Bitcoin is bullshit and is a scam. I believe, as an individual, and this is not financial advice, I think there is a percent of these cryptos, and granted, there's 20 or 40,000 of them at this point. And guess what? In the next 5 years, there'll be another 100,000 of them. Uh, will have the potential to unlock value in the likes of an Amazon or Google. Uh, but again, the way to do that, and we'll get more involved with this as we go on, is to really take small risk. These things at any point in time could, go the other way. Now, look, there is risk in this stuff, right? Like, this isn't like to say, like, we're not going to get up here and say, don't invest in it, because we do, right? But the important thing is to remember that there are ways to invest, and that's what we want to teach people, right? So, for instance, what I do is I take 80% and I put it in Bitcoin. Once the money hits Bitcoin and never leaves Bitcoin, I don't trade Bitcoin. I never touch it. Any dollar that gets converted into Bitcoin stays in Bitcoin forever. I take 20% of the money that I put aside to invest in crypto and Bitcoin. I'll use that to speculate both on a long term basis on some of these other projects and on a short term basis on a trading uh, risk profile. But that is something I'm just starting to learn. And Ted, our glorious trading leader, is helping me with that too, along with you guys. So, but that's how I do it, right? And that's one way to mitigate some of the risk. But again, you have to mitigate the risk when doing this stuff. I hope we answered your questions at least a little bit on some of that stuff. FTX, it it's hard to say. Look, you had Mount Gox happen. We're going to have other exchanges fail. The way to mitigate that risk is to hold your Bitcoin and your crypto in your own wallets. That's yet another way to mitigate the risk of an FTX happening. Don't leave your Bitcoin or crypto on these exchanges ever. What we do is we'll leave whatever amount we're trading with on an exchange, but with the understanding that we know that money could disappear at any point in time. So, if you get into this and you build up say you take 5 grand and turn it into 50, take the 45 off the exchanges and leave whatever you're comfortable with. That's not a specific number. That's just an example of how to mitigate that risk. And I would do it in a way, and this is going to sound counterintuitive. I wouldn't put it in the bank. I'd put it in Bitcoin and put it in a cold storage wallet, because I think there's counterparty risk with the banks too. Uh, that's something that, through years of studying this stuff, I've developed a risk tolerance to, and we can talk about that stuff further down the line. Ted, do you have anything else to add?
Well, not really like an additional topic or subject matter, but just to reiterate and dovetail how important it is to manage the risk that you're taking when you're trading. If you're going to be putting money into a trade, deciding ahead of time where your stops are going to be, and knowing and just being comfortable with only losing as much as you can afford to lose on that one trade, and then trying to scale across a number of different trades to try to take advantage of what the opportunities to profit that the market's going to provide. And you can't you can't you can't earn if you're not swinging. Like, you can't have a chance at winning trades or losing trades if you're not swinging the bat. So being able to swing the bat on a long time frame, and you do that by staying solvent, which you can do that by only losing a certain amount per trade, and being able to weather drawdowns and periods where you can do everything right, but the trade still goes against you. So that's one thing. And then so that managing risk to your trading capital, excellent. Managing counterparty risk, whether you're using an exchange or using the exchange as an example of where you're taking counterparty risk by having your funds on an exchange. If you're, I like your example, you turn 5 into 50, take a bunch of that off and move it to, I mean, if you don't have any other choice, move it to your bank account, and your US bank account, for example, where you deposit, if somebody wrote you a check, you would deposit that check. The better way to really manage counterparty risk is to then move that into Bitcoin, and then make sure that the address that you're sending your Bitcoin to was generated with a cold storage or a hardware wallet, so it is effectively uh, offline, or it's in cold storage, and it's not sitting on a hot wallet on an exchange's infrastructure somewhere. And then what was the third thing that you said? I'm drawing a blank now. Forgive me.
Well,
I just ate
we
the
should add,
biggest plate of rice that you've ever seen in your life. So
no, we and should add to that again, like all this, and we're going to beat a dead horse with it. All this is just our opinion. It's not advice. This is what we think. Happy to share what we think, but figure, we're going to try as we build this out to be a platform. So I think it's important for us to do, Ted, is just kind of a mental note, is what we, and just hearing, going back and forth on this, we really need to separate. There's a Bitcoin investment strategy. Okay. There's a Bitcoin plus altcoin investment strategy, and then there's a trading strategy. Okay. And there's commonalities between all of those three strategies. For instance, you have to mitigate risk in all of those. Okay. And you have to don't put all your eggs in any one of those baskets. And so for us, I think it's important to break down when we talk about trading versus when we talk about investing, uh, and some of those differences in between, and also some of the similarities. Because once you get the general idea, this stuff will come second nature. But the hard part, I think, for people is they're so used to being able to trade on E-Trade or Robinhood and not have this fear of all of a sudden waking up and say somebody's been trading or investing for 2 years, they have $300,000 on FTX, and all of a sudden it's gone. Like that's crazy, right? But that's not necessarily a crypto problem. That's an exchange problem. The guy was a fraud, like and so he was running a thing outside of the U.S., right? And so even if it was regulated, you can't regulate like fraud, right? Like people are still going to try to do that stuff. But what needs to happen in the crypto industry is these exchanges do need to get better, right? And we're still growing. We're still early. So some of these headaches we're dealing with today, I'm optimistic that in 2 to 5 years, you'll be able to pull up E-Trade and for sure trade Bitcoin, right? Like, I don't think that's like a crazy thing to think about, right? Now, as far as some of these other cryptocurrencies, I have no idea. Pure ass speculation. I think you'll always be able to trade these things in some form or fashion around, because it'll just go offshore. If the U.S. wants to be silly and regulate every potential business, yeah, there's scams, but there's scams all the time everywhere. Like they still have. Uh, I mean, think of driving down any street in your city. There's payday loan places everywhere. I mean, all of these things exist, right? Like, and the key is just to educate yourself. And again, it's just risk management, and these bets are this industry is so new and the return is so huge. There's something called asymmetric risk. You don't have to bet everything to make a lot of money. And that's where crypto is really interesting, right? Because it's still early enough to where if you do your research, you place educated bets, there is a potential to make money. Now, I want to be careful in saying that because, that's where a lot of people also get hurt. And so, the important thing is and we'll talk about this a lot, first understand how our money works, then understand why Bitcoin is important. And then after those two things, I think you can kind of if you were to ask me what to do, then kind of take a look at some of the other stuff. But, that's kind of how I feel about all that stuff. Have anything else to add there, Ted?
no, I'm taking notes on some of the things that you're saying because the I think it, we can we can weave a narrative, or there's a couple of threads that I wanted to tease out from what you were saying. You talked about three trading strategies. Bitcoin, that was one, which is just acquire Bitcoin and store it somewhere safe. Period. Strategy number one. And the
And
second was
that's
Bitcoin.
honestly like that's what 99% of people should do. Honestly, like you know, if we're being honest, prudent educators with all this stuff, and maybe it's not 99, maybe it's 90% of people, but at least you should start there. Let's put it that way.
Excellent. The second one was Bitcoin plus something. What was the second part of the second strategy?
So Bitcoin and then altcoins or shitcoins
Altcoins, yeah.
as they're so affectionately called.
The SCs, I'll call them. All right, and then the SCs, and then what was the third? The third piece was it just
Trading.
flat trading? Trade. Okay.
Yeah.
So,
Because they're
uh,
yeah, go ahead, sorry.
oh no, no, no. Let me make sure. If anyone is watching, just wanted to point out, I am streaming from Starlink. I'm out in the sticks, okay, and we're still new at this, and I'm still kind of a streaming rookie, and I'm just trying to figure this out as we go along. So if it cuts out and comes back, just be patient. We're working out how to best do this. I wanted to share that real quick because I know it had dropped out a couple times, but anyway, housekeeping note aside, I think we can, well, what I'm detecting here is some fodder for like a dedicated live stream where we talk about a Bitcoin buy and hodl strategy, where you're either just at the beginning of the month, or you're like from a dollar, looking at this as like an individual like myself who's been buying Bitcoin for years now. Basically, I'll say something that Barry Diller, and I don't know Barry Diller personally, but I'm name dropping Barry Diller's name here because he is wildly successful in business. And he said something interesting once about they found a method, or they found a recipe with using Facebook ads to drive business for one of their portfolio companies. And I'll never forget this. It's like I can see his face and hear his words, echoing in my mind. It's like he's basically was like, "Yeah, we spend every spare nickel we can on Facebook ads." Like he was talking it. Now who knows if it actually was that great? All I know is that the way he articulated that, it resonated with me because they believed so strongly that they were willing to find every last piece of spare change in their business to then invest into this mechanism that was generating a substantial and healthy return. Or else, why would you do it if you're a savvy uh, business person? So, what I'm trying to communicate is that, given my belief in Bitcoin, not just as a project, but as a thing that is greater than the sum of all of the individual parts that make up the Bitcoin network, the participants, the miners, the node operators, and people that are transacting with it, is that I personally take that same approach. Is that every time, and Josh, you'll chuckle hearing this because I've told you on several occasions when I look at my exchange like transaction history, how many times I purchased Bitcoin in the last 30 days, and it's double digits, more times than there are days in the month. But I literally, as I work through my day to day, week to week, and like managing my personal finances, I find every opportunity to take some money, some US dollars, and convert that into Bitcoin and usher it off to cold storage. And
Well, and while
so,
you're on that point real quick, sorry to interrupt. I
no,
want
no.
to say something here. This is something I think is really important for people to try to understand. We talk a lot about measuring counterparty risk in trading and investing. Essentially, what you're doing with buying Bitcoin and putting it on cold storage is managing your counterparty risk with the banks. And people don't look at it this way, right? People look at it, they
Right.
never think about it in a million years that all of a sudden you could wake up one morning and your bank could FTX you. Well, let me tell you something. This thing you signed when you deposited your money in the bank, they have every right to do it. The second you put that money in the bank, it's no longer yours. They own it. They could do something called a bail in whenever they decide. Now, I think this is a much bigger worry for the big banks, the top five big banks, than it is maybe for your regional bank, right? And this isn't anything against banking, right? I use banks. I like banks. I have dollars in banks, right? But all I'm doing with my Bitcoin is taking and measuring my counterparty risk in the banking system. And it sounds crazy to anybody that's new to Bitcoin to think, why are you using Bitcoin to measure counterparty risk against the bank? That sounds absurd. Well, you can do it with Bitcoin. You can do it with gold. To a certain extent, you can do it with real estate, right? But there are, in my opinion, there are better reasons to use Bitcoin than gold and real estate for that. Now, not everybody agrees with that, and that's okay. But the main point I want to get across is that is what Bitcoin is doing for me. It's measuring counterparty risk against the banking system. And the reason I decided to do that was because I took the time to learn about how our money system works. Is this a valid fear? Up until the pandemic, I would have said, I don't know, I'm probably worried about nothing. But then they locked everybody in their house for 3 years and printed a buck ton of money. So it doesn't sound so crazy anymore. And so I don't know how to articulate it in the best way. But what I want to say though is I think that's something we should dedicate some time to talking about is, look, we're not using Bitcoin to try to become millionaires overnight. It just won't work that way. Like it's my favorite saying, this get rich quick scheme has taken an awful long time, right? This game is going to take it's not going to happen overnight, and that's why people that have been around for a while, we understand like where this is ultimately going. But I just wanted to note that because I think it's important for people to try to understand as we educate people about Bitcoin and crypto, why somebody might want to have 1 to 5% of their portfolio in Bitcoin, not just to speculate on outsized dollars returned, but in case of some sort of systematic bank failure, that your wealth is protected and you can live. And gold can accomplish the same thing. Silver can accomplish the same thing. I just don't want to. I'm nomadic. I travel all over all the time. I don't want to carry 10 pounds of rocks in my backpack every time I go somewhere. I just don't want to do it. So I think for that reason, amongst others, that Bitcoin is much better. But there's detail that we can get into how to store it to where, I don't have access to my Bitcoin. I can't touch it if I want it. It's geographically separated. If I wanted to sell it today, I couldn't. So there's strategies around that to kind of again mitigate risk and counterparty. We're on the internet talking about Bitcoin. Probably not a good idea if you walk around carrying Bitcoin to be doing that. So, there's all kinds of strategies to implement and ways to think about this. But I just wanted to bring that up why we were talking about that because it's something we need to know and how we because I think it's one of the main points that people miss, right? All they see is, oh, bubble mania, crazy, crazy. Well, you're not going to hear on the mainstream news like you should really take some measures to protect your wealth in case the banking system fails. Like they're not going to come out and say that, right? Like they just won't. It's not in their interest. It's not in their obvious. And who knows? We'll probably get this video taken down if anybody ever watches it for saying something like that. But it's, anyway, I
That would
just
just
wanted to bring that up. Where we're supposed
that would be great. That means somebody watched it. So excellent.
to
But
cross that bridge
interesting
when we get
points.
there.
Interesting points around managing counterparty risk and how we're not expecting the price of Bitcoin to go to a billion tomorrow after we put all of our US dollars into Bitcoin today, but it's more about being prepared for some black swan or maybe not a black swan and or like the something terrible happens, you go to log into your bank tomorrow to I don't know, pay your mortgage or something like that, and sorry, you're locked out. I mean, I had an FTX US account, didn't have a whole lot in it, like $100 worth of Bitcoin, but thank goodness that a week or two, and I didn't know this was going to happen. I didn't know if I had known, I would have moved all of that stuff out of there way earlier. But I was like, I should really, I'm not really using FTX right now. It was just one of these like things. Like in hindsight, I'm like, God, I feel like I like dodged 10 bullets, but managed to move it to cold storage and then boom, the whole thing went down. And I just for grins that the day that it all hit the fan, I went and tried to log back into my account and lo and behold, I couldn't. And it didn't matter. I think there's probably 4 cents USD in there still from what I ACH'd my US dollars out after selling some other altcoin crap like some Shiba that I bought and moved my Bitcoin off and then sold the SHIBs and then moved those dollars out, and then couldn't do that anymore. Uh, so that's a really good example of having or being rug pulled by an institution that you never imagined was possible, a situation or circumstances that you never imagined would be possible. So strategy number one: buy and hold, move it right to direct to cold storage, and it's safe. No one can take it from you. Literally no one. Not even the $5 wrench attack would work in that case, because especially if you have multi-sig, like two of three or three of five quorum setup.
And we'll we'll
So
we'll get into we'll get into all that and how that works, and because what we always got to remember is like people are listening, they have no idea what we're talking about, right? And so like when we talk about, for us, for our purposes, like this is what the information we'll record separately outside of these live streams and have available on the site, so we can point people to, when you say a quorum or a 3 of 5 multi-sig, you can say, hey guys, go to the website, we did a video on that to help you understand. And then when we're live chatting, people can ask us. Like one of the things I think was interesting about Twitch versus YouTube is that, like, look, if you're really interested in learning, you have two people here that have been in it for 5 or 6 years. We're not the titans of industry, right? We don't run hedge funds, we don't, but we are experts in the field, and we do understand what we're talking about, and we can help people really try to get their minds around this in a way that's maybe not so intimidating, right? Because I think, you know, we're not Bitcoin maxis. We like crypto. We understand the Bitcoin maxi point, and I think they're essentially 90% right. I just think there's value in some of the other things being experimented with. So, that's something to note too. Like as we go forward, is to, you know, for us, like really sit down and say, okay, we need to have videos on basically 10 different things. So somebody can click Bitcoin, scroll down and say, okay, cold storage, here's a video, right? Like,
yeah, half the reason I pulled up the notepad here was to make the notes on these things that we're talking about so that we can go back and reference them later. So, strategy number one: buy and hodl Bitcoin. Second, I think you articulated pretty well. Uh, buying, but taking that or so Bitcoin and altcoins together is a second strategy where you're taking, and tell me if I'm articulating this back the same way or the appropriate way, is taking 80% of what you earn, shuffling that off to cold storage, and then putting the other 20% to work, uh, doing the research, understanding and selecting uh, altcoin pairs that you believe provide the right type of opportunity to take a speculative bet that they will either go to the moon or appreciate or move up in price appreciably. Talk a little bit about the second strategy, if you would,
yeah. So
good
yeah,
sir.
yeah, yeah, for sure. So no. And then the second strategy is essentially how I've managed to be in crypto for 6 years, and essentially just take hypothetical scenario. You have $10,000 to invest. Okay. What you would do, and you don't have to do this all at once, by the way. There's a bunch of different strategies to do this, but let's just say you wanted to do it all at once. You would take $8,000, you would buy Bitcoin, you would move it to cold storage, and you never think about it again. All right. And then you would take the other $2,000 and you would take speculative bets, because that's what they are. I don't know. You don't know. All these people on TV or on the internet, they don't know either. We're all speculating to the best of our ability, and we're using information like the growth of the network, wallet addresses, all things that are out there that you can kind of say, okay, this is some information that can lead me to believe. But honestly, what this all has revolved around so far has been Bitcoin's 4-year halving cycle. I don't know that that's going to be the case moving forward forever, but this strategy essentially entails making speculative bets with 20% of your allocatable. So let's take a further step back. If you have 100 grand that you're going to invest, 10% of that 100 grand would go to investing in Bitcoin and crypto. Okay. And of that 10%, 8,000 would go to Bitcoin and 2,000 would go to some of the alternative ones, Ethereum, Solana, Luna. Even though it didn't work, it made a lot of people a lot of money. And the theory behind this is when Bitcoin runs, which it will, the altcoins benefit because more money comes into the entire market cap and system. Now, You could say, okay, Josh, what you're talking about is just a Ponzi, right? But it's not. It's all technology was like this. The same with the internet stocks, right? What you're doing is over time, the total addressable market cap of the Bitcoin and crypto ecosystem is going to grow. You and me are still early there, right? And this is kind of the theory behind why I started doing this. I don't have to be 100% right. All I have to do is put my bet on the track when the train rolls by, and I'll be all right, right? And so with the altcoin stuff, what you're looking at, and I should preface this is our 2 to 5 year bets. This isn't like you say I'm going to put 2 grand on some meme coin, right? Some NFT or something. And I don't know anything about NFTs, so whatever I'm talking about, I'm just understand that. Or some crypto, and it's going to turn into 100 grand tomorrow. It doesn't work like that. Like 99% of people that you see on Twitter, they're doing it just doesn't happen. It could happen, right? Like you could also win the lottery. A bus full of supermodels could also pull up to your door tonight, bring a keg of beer. You have the best night. You're like, could it happen? Sure. Will it happen? Probably not, right? And so these strategies take time to play out, but over that 2 to 5 year period, and you could do 70-30, 60-40 of your bucket allocated to crypto, not of your entire investable amount. Like I wouldn't advocate anybody do that that's just learning. Now, if you've been doing it for 2 or 3 years, you've been successful at it, knock yourself out. But, kind of the other thing that happens too is my long term goal every day I wake up, every year I go through this. I want to have more Bitcoin this year than I had last year. That's my basic goal, right? And so you can use altcoins to do that. And you can go back and forth and argue about, okay, Josh, you should have just put the money in Bitcoin, and over time you would have a lot less headache and probably would have worked better. Yeah, maybe you probably could be right. Don't know yet, right? But I like this. It's fun. I like I like the action, and you could say that that's stupid, and I would probably agree with you. But I'm going to tell you I like it, and I do it anyway. so but again, that's me, and like I have the ability to do that. Not everybody does, right? But it's come from a lot of mistakes and a lot of pain and trading, and it's better than the stock market. You're right. Like it's just, and then again, that's kind of the strategy. I've gotten off topic here, and you'll have to forgive me if you're watching this for the first time. We'll articulate this in much more you know coherent way, but generally the strategy is that, and you around the 4 year halving cycle, like even right now, the market's ran up a little. If it cools off a little bit, it'd be nice to accumulate some of these, and there's ways to pick these altcoins that are better than others, right? And so, I got to think about how I want to present this, because what I really don't want to do is encourage people to go do this. To be honest with you, I think I want to let them know this option exists, and I want to teach them, ways to do it where they mitigate their risk. But uh, I got to be real careful how I say it, because you can lose a lot of money if you don't do this the right way. Uh, and so that's kind of, I guess, let me think about that as we talk on that second strategy, Bitcoin and altcoins. Uh, I think as long as we preface the fact that I look, the way I think about all this is people are smart, they can make their own decisions. I'm going to give you a framework that will help mitigate your risk. I'm not going to tell you what to buy. I'm going to tell you some things to look at to help you find things to buy. Uh, but my assumption is that people are smart enough to do what they want with their money. I'm not the SEC. I'm not the government. I'm not going to tell you what to do with your money. If you want to play this game, we're here to try to help you do that. So I'll think about how to frame that, and we can go in further detail as we move on. Was that helpful, Ted?
Yeah, very helpful. So the thing that I was looking for, and you so eloquently stitched together, is that you can take some portion of your capital that you're allocating and make some decisions with part of it, and then put the rest of it to work uh, by leveraging what we know about total addressable market and the ecosystem as a whole. And I think some of the things that you said that were really most that resonated most with me was that you don't have to be right every time. I think it was Mark Cuban said you only have to be right once to get rich. But the point I'm trying to make is the thing I wanted to continue to just reiterate was something that you said around like the freight train's going to be moving this way, and we just want to get close to it, or we want to be able to step in front of it, and you can't you don't know where the freight train's going to come from. You have to be in the game, so to speak, and you have to be positioning. Again, and as we dovetail and get into the last one of these the third leg of the stool, if you will, the trading side of it, which is just purely like seeking, return on your speculative bets, is that you don't know where the freight train's coming from. You just want to be in a position where when it does come through, you're able to step in front of it, or it's ready. You're already standing where the train's going to be coming through, and it takes you where you want to go, in a manner of speaking. So that's I look forward to actually putting together something material. Maybe we can make some slides and have an accompanying blog post or something like that with a video that just articulates like broad spectrum to begin with, and then maybe funnels down into specifically the things that you should be considering, not necessarily what to be doing, but things that you should be considering as you make decisions about how to be in a position and to take positions, I should say. Anyway, that was all good stuff. So I appreciate that. And the last one, as we come up on the hour mark. Wow, we've been doing this for an hour. This is great. The the last lever here is just from a purely seeking alpha. If you're in the financial, or if you've heard of seeking alpha, then you know what I'm talking about. But like alpha in the form of return, like putting money to work and getting a return on that, uh, is the last one. And I'll just run with this for a moment. Strictly speaking, you're not necessarily concerned about which instrument or pair you might be trading, like if you're trading a currency pair like dollar versus euro, or if you're buying a stock, which is just stock ticker versus US dollar. I was early days in my career when I was day trading. I didn't understand that when I was buying a stock, I was basically shorting the dollar in the same like stroke or the same mouse button click. So I was taking dollars and I was saying, you know what? I think these dollars are going to be worth less over time compared to this Intel stock, or this low float biotech stock that I'm going to this penny stock that I'm going to day trade. So I'm going to short the dollar and long the stock. And what I'm hoping is that I can then sell this stock and get more dollars back. So purely just looking for, I should say, opportunities to take some dollars, put them into a trade, and ideally get more dollars back. Or if it goes against you, meaning the trade goes the other way, you only lose a certain percentage of your trading capital, in any one of those losing bets. And we'll have to talk more about like what like I guess what a capital preservation strategy slash trade, like positioning, like managing the position size to make sure that you're only taking a trade big enough, sized big enough that doesn't put your account capital at risk, and doesn't create too much of a drawdown, if it goes the other way. Because quite frankly, we um, we don't know which way the markets are going to go from one minute or day to the next. It's all about positioning because you never know where the freight train is going to come from. So, pausing
Yeah,
there
and
for a
then
second.
yeah. So the only thing I'd add, and I got to run. I apologize. I'm kind of up against the clock here. That strategy one, acquiring Bitcoin, is about, in my opinion, measuring counterparty risk versus the existing system, right? And moving your money outside of the system and acquiring an asset that you believe in my opinion, is not necessarily about making US dollars. Strategies two and three are 100% about making US dollars. I could care less about any of the assets that I buy outside of Bitcoin. Like there's a great line, and I guess I got to be careful because this applies to both guys and girls. Just because you have sex with somebody doesn't mean you got to marry them, right? Like same with assets, right? Just because you don't have to fall in love with them just because it made money. It doesn't matter. All we're trying to do with investing in some of the altcoins and trading is make money to acquire more Bitcoin. Truthfully, to pay bills, right? You have to have dollars to pay bills, but at the end of the day, I can say personally, I have a level of conviction in Bitcoin that's very strong, and I'm okay if I'm wrong in that conviction because I can look back and say, you know what, I did everything I could. I studied for thousands of hours, and at the end of the day, I missed something and I was wrong. That's okay. Like that's fine, right? That doesn't bother me. But I've reached that after many years of this, and so I think as we kind of think about how to articulate this is Bitcoin is in a whole other league compared to we're not really trying to speculate with Bitcoin. We may trade futures against it, sure, but that's entirely different than the Bitcoin that we've acquired and put in cold storage. We're not buying spot Bitcoin and selling spot Bitcoin to make 20%. The reason you buy is one, again, the counterparty risk against the system. But if that is correct, and I think it's what's Chamath, he calls it schmuck insurance, right? If if your schmuck insurance, if you need to collect, it's not going to matter. It's and something else that's interesting too, and I think about this all the time, just kind of a sidetrack. If Bitcoin gets to be $5 million in the next 6 years, that's an issue because what world do you live in?
Yeah,
But
as much as everybody wants it to moon like that, what comes along with it is probably something what we can end on is to, like, food for thought. If Bitcoin did rip to $5 million a coin, like, what kind of world would we be living in as a result of whatever it took to drive the capital flight, in a manner of speaking, out of basically people were saying, you know what, these dollars or these euros or these pesos, I would much rather have Bitcoin instead.
well, that's why I think it's the way out is to inflate the dollar away over the next 10 to 15 years and move towards a currency that's backed with Bitcoin, gold, silver, whatever commodity you want to put in it. But I apologize, I got to run.
Okay, we
This is
will
a
end it
great
there.
a
Thanks,
great hour.
everybody. Yeah, great hour. We'll see you on the